Amazon has announced a 20-for-1 stock split and a $10 billion buyback. This seems like a Mo headline right here.
Yeah, I like this story.
Amazon on Wednesday said its board of directors has approved a 20-for-1 stock split. It's the first split since 1999. Oh, wow. And the fourth since Amazon's IPO in 97. Wow. The first since 99. The company also said its board has authorized Amazon to buy back up to $10 billion worth of shares. This, of course, comes after
Google.
Google. I was actually going to say after Bezos no longer at the helm.
Oh, right. Yeah.
I don't know if you recall.
Yeah.
This means that now the typical investor, guys like Mo, have a little easier path into Amazon, essentially.
Kind of. It's like a perception move. Mm-hmm. It's like to make it seem like it's cheaper, but you really just own the same.
No. But I'm saying you weren't going to buy a partial share previously.
Actually, now a lot of brokers do fractional shares.
Yeah, but I just felt like you wanted a full share.
Well, yeah, you know me, I want the full one.
Ever since, you know what I mean? Why not have it?
Yeah.
Why not
definitely
manage it in another way? Let's see what else it says here, Will. Amazon announced its first stock split since the dot-com boom. The stock soared 6% in extended trading, so apparently people loved it. Mm-hmm. Yes, obviously it's cosmetic. It doesn't make a fundamental change, percentage-wise.
Right.
But it does. I mean, what was the stock at prior to the split? 3,000?
Yeah, it was around there.
Canadian. I'm seeing 29.55.
Oh, yeah, 3,000 US.
Let's see the 5-day here. Oh, no, but let's go before it jumped up like crazy. That's interesting. It peaked over there, 36.96 USD. I don't know if that's the overall peak.
I guess this was during Christmas.
He's looking at a 6-month thing here.
But the buyback is actually more interesting because the buyback indicates that Amazon thinks that their stock value is too low. Mm-hmm. And it's also a nice thing for companies to do for their shareholders. But they think it's too low, and that means they have $10 billion that they can't use to expand their business.
Oh, I don't think they're worried about that.
No. They got the money.
I think they're just fine when it comes to that. Yes, okay. So it doesn't fundamentally change anything about the company other than possibly making the shares accessible to a larger number of investors because of their cheaper price. I don't know how this impacts the stock trading. I don't trade stocks anymore on any of those fun platforms.
The well symbols
any of the video game trading platforms, which actually, for some reason, people connect their bank accounts to. Mm-hmm. I'm just joking. But I wonder how this would impact that. Like here, the split happened Wednesday's close. The cost of each share would go from $27.85 to $139, and each additional holder would get 19 additional shares. So does that mean now, if I'm in the Robinhoods and such, I'm $139 for a share?
I don't think it's.
Maybe eventually.
Eventually, yeah, it will be $139.
Yes,
sure.
I do think that matters.
Well,
I know it's cosmetic, but I think that matters.
Yeah, because it shows you that the company thinks that their stock was climbing high to the point that they had to make it more accessible, and it will continue to climb high.
And another thing about this, by saying it's strictly cosmetic, cosmetics matter in marketing.
Absolutely.
The way that something looks. Yeah. I still run into people in the world, when I'm in the world, that are like, I was too late on Bitcoin. I can't afford one of those. Mm-hmm. And you're like, wait a second. You realize you don't need one whole Bitcoin. Right. It's up to you. Yeah. You get whatever you want. But you don't need. So cosmetics do matter. Marketing does matter. And I'm sure that all these things were considered, this particular split.